Hi, welcome to my YouTube channel. Today I'll be discussing candlestick chart pattern, which is a very important subject for anyone who is into share trading. So let's begin. So what is candlestick? So first of all, we will understand what is candlestick. So if you go back into the history, so in 17th century, Japanese were using candlestick to understand the price movement. So Mr. Munehisa Homa, who was a rice trader, he started capturing the price movement in candle form, and this practice stayed with Japanese for almost 200 years before the American got to know about this, and then the entire globalization happened for candlesticks. So now everyone who is into share trading or other kind of trading, or anyone who want to understand the movement of price or any other thing, they refer to candle chart. So in a candle chart, what candle represents? So if you look at the image, so there are two candles. One is green, another is red. So green candle represent bullish pattern, whereas red candle represent bearish pattern. So in green candle, the closing price is higher than opening price. So this is the opening price. Say for example, this is $1. Then the closing price will be higher than $1. So that could be 1.582 or any amount, but has to be higher than the opening price. These are shadows or wicks. So what wicks or shadow represent? This represent that price has gone below the opening price or higher than the closing price, but they closed at the this level, and this entire area is called body. Similarly, for a red candle, opening price will be higher than the closing price. So, unlike green candle, wherein opening price is lower than the closing price, in red candle, opening price has to be higher than the closing price. So, for an example, the opening price for the security or the instrument was $2, then the closing price will be less than $2. It could be 1.8, 1.5, or $1. So again, so this is the bearish. Red candle represent bearish pattern and green candle represent bullish pattern. And if we look into the chart, so chart is nothing but the formation of multiple candle in a go, which you can see in the given chart. So here, if you understand the candlestick pattern, so you it will be easy for you to place a buy for any instrument or to place a sell for the particular instrument. So here the price moved up and then it went down, then again it went up, then again it went down, then again it went up and down. So if we know which are the candle which gives us a signal for a sell, then it will be easier for us to place the sell call. So here in this particular instrument there were three buying opportunity and there were three sell opportunity, and the price is almost same in the set duration. So if we know where to place the buy order, where to place the sell order, then we can make multiple trade which will give us profit. So multiple profitable trade And this all can only happen if we know the candles which gives us the sign or signal to enter into a trade or to exit from a trade. So I hope I am making myself clear. If you have any doubt, then please comment into the comment section and I'll try to reach out to you with the explanations. So going to the next section wherein we will be discussing the candle pattern. So here, like these are the pattern which help a trader into exiting a trade. Similarly, there are pattern which help a trader into entering into a trade. So let's move to next section, which is the chart patterns. So the first pattern is Marubozu. So what is Marubozu? Marubozu is a Japanese word which means shaven head. So if we look into the candles, so these candles don't have shadows or a wicks. So that is the reason it is called Marubozu. Marubozu candle means strong momentum. If it is a green candle, it means strong bullish pattern. If it is a red candle, it means strong bearish pattern. So if I see these kind of candle in my trade, I will like to take a trade in the similar direction. If it is a green, I'll take a buy call. If it is a red, I'll take a short call. Now in Marubozu, there are multiple forms. So what are those forms? So there are three Marubozu candle. One is Marubozu full, which means open a for a green candle, open is equal to low. For a red candle, open is equal to high. So that is Marubozu full candle. The other is Marubozu open. Marubozu open is nothing but open is equal to low for a green candle and open is equal to high for a red candle. Then the third one, which is Marubozu close, wherein close is equal to high for a green candle and open is equal to low. Open is close is equal to high, close is equal to low for a red candle. So Marubozu close is for a green candle it is close is equal to high and for red it is close is equal to lowest price for the particular security. So and these candle represent strong momentum. So whenever you see these kind of candle, you have to take the trade on the confirmation. So what is confirmation? Confirmation will be on the following candle, or if you are taking a trade, you take a trade with a stop loss. So let's move to next candle. Next candle is Doji. So like Marubozu is strong momentum, Doji is indecisive momentum. Doji means confusion, indecision. And again, similar to Marubozu, there are different pattern in Doji. So one is dragonfly dozy, other is gravestone dozy, and third is long-legged dozy. In dragonfly dozy, though the open is almost equal to close, but the body forms at the upper level of candle. So if you can look at the candle, where is the body? Body is at the upper part. In gravestone dozy, candle body formed at the bottom level, and long-legged dozy it is the most confusing at the center level. So usually dragonfly is representing the higher buyer momentum. For gravestone, it is seller are in upper hand, and in long legged both buyer and seller are in strong hand, and that is the reason the body is formed in the center. So so if you see doji, so doji candle means there are chances of reversal in pattern, but again reversal will be confirmed by the following candle. So that is how doji is taken into consideration. Doji cannot be the candle on which you take a trade. Doji followed by next candle, doji placement, and the next candle. So say for example there is a downtrend, and in downtrend you see dragonfly. So here buyer is in the upper end. So I'll check for the following candle and then I'll take a trade if the next candle is green candle and closing above the dragonfly. Similarly for gravestone doji, if it market is in uptrend and this gravestone doji comes in and the following candle is the red candle closing lower than this candle, then I'll take a short trade. So that is how we interpret these kind of candles. Now let's look at a chart to understand how doji work or how to interpret a doji. So in this chart you can see there are too many dojis and all type of dojis. So there is a dragonfly, there is a gravestone doji, there is the long-legged doji, and this all means confusion. So in this area market was confused and the price movement is limited, but once the buyer took the upper hand, market moved up, then again there was a confusion in the market, then again the market went up, and then there is a doji and then market came down. So it is important to understand the pattern of a candle and take the trade. That will help you or anyone who is taking trade in making the trade profitable. So now let's move to next pattern. So the next pattern is morning star. So what is morning star? Morning star is a pattern of three candles and that signals bullish reversal. So how this signals bullish reversal? So there are certain criteria to it. One, the market has to be in downtrend. Two, the previous candle has to be red. Then there has to be a doji kind of candle, and the following candle should close above the previous candle. Then it is a confirmed morning star. Unless these all criteria are met, it this candle is not a morning star. Say for example this pattern comes in a uptrend, then in uptrend it is not a morning star, right? So after this morning star candle pattern, market went up. So that is how we have to interpret candle and take a profitable trade. Again, market here it made another pattern and it went down. So unless and until we understand what are these pattern, we will not be able to take a profitable trade. So it is very important for everyone who is watching this video. And if you have any confusion, then please go back, rewind, and watch the video again and again, and try to stimulate it into the live trade to understand these pattern and their importance. If needed, you can take a paper trade to understand the if you are able to make the right trade or not. Moving on to next pattern. So next pattern is very similar to morning star. This pattern is nothing but a morning doji star. So morning doji star is similar to morning star, but with a doji as a second candle. So here in this Morning star, the body is not a doji, because opening and closing are not same. In doji, opening and closing price has to be almost equal to same or plus minus a fractional amount. But in morning doji star, the second candle has to be a doji candle indicating stronger indecision and potential bullish reversal. Why we are saying potential bullish reversal? Because doji means confusion. So if the next candle is not a candle closing above this second candle, then it won't be a trend reversal. So that is morning doji star. So let's move to next pattern. Next pattern is opposite of morning star. This is evening star. So evening star is, again, it is a clubbing of three candle and it shows a trend reversal. So here if you can see, the trend was uptrend. Then this pattern came in evening star, the green candle, the hammer pattern, and the following candle closing lower than the previous candle, and market went down. So unless we understand these patterns, we will not be able to exit our uptrend trade or take a downtrend trade. So it is very important to understand these trade and then take a trade based on the confirmed candle confirmation. After confirmation, we take a call, right? So let's look into the next pattern. So next pattern is evening doji star. So again, so the only difference in evening star and evening doji star is that this second candle is doji and it it shows more confusion. Here it is kind of inverse hammer, but in case of evening doji star, the body will be thinner than this. Price open is equal to price close. Remember? So that is how evening doji star will form. So let's move on to next pattern. So next pattern in our slide is bullish star. So what is bullish star? So bullish star, if the market is in downtrend in small body green candle after a big red candle is a bullish star. So here it is a red candle and then the following candle is a green candle. So market has to be in downtrend. This pattern is not valid if market is in uptrend. Market has to be in downtrend, and after this big red candle, this green candle comes in. That is bullish star. And what this bullish star represent? This bullish star represent market reversal, right? So let's look into the chart to understand the bullish star. So here, if you can look at the marked, so here if you look in the marked candle, this is the morning bullish star. So market is in downtrend. This bullish star happened, and then there was a few more red candle, and then market went up. Then there was pullback, then up, then pullback, then up, and then again pullback, and then up. So significance. So if say for example, I bought a security at this price and market went down. So what is needed? I want a signal wherein I can understand that how far the market will go down. So this is a relief to me. Or if I want to take a trade into this security and it is going down, so this is the place wherein I'll try to take a trade, or I'll wait for the confirmation and then I'll take a trade. Done. So let's move to next candle. And friends, if you feel any confusion, I'm saying try to check these pattern on live trade and take a paper trade. That will give you more confidence in understanding the pattern and taking a trade. And before going into live trade, do some paper trade. That also helps a lot. So next pattern is bearish star. It is opposite to bullish star, which is wherein the candle was in the downtrend. Here bearish star, the pattern will come into the uptrend. So there has to be a uptrend, there has to be a green candle, and there has to be a red candle. So if we look into the chart, so it is very much, the pattern is in uptrend, and then there is the green candle, and then there is a red candle, and then the market going down. So it is kind of, you have a power to predict where this market will go. Will it go up, or it will go down? So but it comes with a practice. So you'll have to practice again and again to identify these pattern and then take a trade. It will not start with first attempt. It may take 2, 3, 5, 10 times to identify these patterns and then take a successful trade. So again, time and again, I'm requesting, if you feel any doubt, any confusion, go back to the beginning and watch the video again and full video. Then only you'll gain that confidence to take the trade. Moving on to next pattern. So next pattern is hammer. So this hammer is, if you watch any video on trading, there are a lot of pattern people talk about. Hammer is one of the important pattern, and this hammer, again, this represent bullish trend reversal, and it has to be in the downtrend. So there are certain properties or features of this hammer which makes it more valuable. So a hammer is a bullish reversal candle that usually appears at the end of downtrend. So there is a downtrend, and suggesting potential reversal is through the hammer. So hammer has to be a small body with a long shadow, and market has to be downtrend. So if we have to understand the importance of hammer, so let's look into the chart. So see, there is a downtrend, and then there is a hammer, and then there is a uptrend. This, you can say that this is also a hammer, but again the confirmation was not there. Here it is a doji, and there was two green candle, but again market went down. So these are the false signal, and so you have to wait for the confirmation before taking a trade. So this can be called as doji, but not a inverse hammer, right? So I believe things are making more sense now after watching these 9 patterns. So we can go to next pattern to understand what is more. So before going to the next slide, difference between doji and hammer. Doji has a smaller body where open and close price are almost equal, and a doji signify indecision, whereas hammer candlestick pattern comes after price decline. So in hammer, body will be bigger than the doji. So let's move to the next pattern. Next pattern is shooting star. Shooting star is kind of inverse of hammer. So again, what happens here? So market is in uptrend, and then shooting star comes in, and then the trend reverse. So price is ascending and you see shooting star, and then there has to be a falling candle which confirms the trend reversal. You cannot take this candle as individual candle to make a decision on the down trend reversal. So the following candle has to be lower than previous candle, then only the trend is reversed. If say for example following candle opens up green and closes higher than the previous candle, then this shooting star pattern is not confirmed for trend reversal. Then you'll have to wait for more confirmation or more candle and then take a trade, right? So let's move to next pattern. Next pattern is bullish engulfing pattern. So like the word says, engulfing. So engulfing, so there is a red candle, and the other candle, the next candle is green, and which engulfs the previous candle totally. So it opened at the lower price and closed at the higher than the previous candle. So again, this pattern is pattern of two candle, and market has to be in downtrend. Then only this is a right pattern to identify the trend reversal. So let's understand in the chart. So there was a downtrend, and what happened? There was a downtrend. This was a red candle, and the next candle, it in fact closed above the previous candle even. Then there was a inverse hammer, but this is only confusion. Market want to find the direction, and again they got the direction and moved up. But this is, we can call it Marubozu or bullish engulfing. This candle, individual candle is Marubozu, open Marubozu, sorry, close Marubozu, because there is a Vix or shadow at the top, and but these two candle put together make it a bullish engulfing pattern. So shall we move to next slide? So next slide is bearish engulfing pattern. So opposite to bullish engulfing pattern, this is bearish engulfing pattern, and similar to previous pattern, the previous candle was green and the next candle opened in red, and it engulfed the previous candle. So what will be the properties of this pattern? It has to be market in uptrend, right? And this candle signifies trend reversal, and market was in uptrend. This candle was green. There was some consolidation here. Then this candle happened and market found the direction downside, right? So see how important it is to understand the importance of a candle and then take a trade. If you do not identify such pattern, then it will not be. If you are already into this trade, then you will not exit if you do not understand the significance of this candle. Or if you are finding a opportunity to take a short position, then also it is important to understand the significance of this candle. And after this candle, you take a short position or you exit your long position. Right? Shall we move to next pattern? So let So the next pattern is dark cloud cover. So what is dark cloud cover? Dark cloud cover is a bearish reversal pattern, and this is a pattern of two candles. The first candle has to be a green candle and following candle a red candle which opens higher than the close of previous candle but closes within the previous candle but lower than the previous candle, and market has to be an uptrend. So that is dark cloud cover. So if we look into the chart, so here in this chart, the market was on the uptrend. Here it was uptrend, then again uptrend, then this candle, and followed by this candle, and the market went down. Then there is a Marubozu candle. So if we don't understand Marubozu candle, or say this bullish, bearish engulfing pattern, then will not be able to take the right trade, exit from the trade or enter into a trade. So friends, time and again I'm saying it is very important to watch the video till the end, because there are very important patterns which will help you make more money in the trade. No matter how many trade you take, it has to be profitable trade you make. That is what more important is. So now moving on to next pattern, it is piercing line. So piercing line is opposite to dark cloud cover. So here the previous candle is a red candle and the following candle is a green candle. So if you look at the chart, so market was in downtrend, then this is the red candle, and then this is the green candle, and market went up. Then there was a pullback, and then significant pullback, and then this is closing Marubozu. So even if you have not taken trade here, you should have taken trade here. Then there was again a pullback, and probably there was a uptrend again. So this is the significance of understanding candle pattern, candles, chart pattern. So let's move to next pattern, which is bullish Harami. Bullish Harami is a pattern wherein the previous candle was a red candle and then the green candle happened, but the green candle was totally engulfed in the not engulfed, because this is the next candle, but the body was within the red candle. And again, this should happen in a downtrend, because in downtrend only there will be a trend reversal. In uptrend this candle or this pattern will not make any importance or significance. So shall we move to next pattern? So next pattern is bearish Harami. So again, like bullish Harami, which happened in a uptrend, no, which happened in a downtrend. The bullish Harami is the reversal. So there is a downtrend, then the candle happened, and then market moved up. So here in bearish Harami, the market was up, and this candle happened and market went down. So this is the candle. This is bullish Harami. Falling candle was lower than this. Then there was some pullback, but ultimately it went down. Right? I hope after watching all these patterns, you will be able to take more profitable trade. So that will make me more happy if you are taking more profitable trades. Let's move to next pattern, which is combination of three candles, and it is called three white soldiers. So three white soldier means three consecutive green candle, higher high and higher low. So if we look into the chart, so here higher high, higher low, higher high, higher low. This means that trend is intact and market will move up. Trend is intact and market will move up. So even you need not to wait for three candles. If you want to take a trade, you can take a trade with keeping a stop loss on the closing price of previous candle if the previous candle is Marubozu candle or closing higher than the previous candle. So that is how we take trade. That is how we make profitable trade. So next pattern is three black crow, and again it is a combination of three candle wherein the three candle is closing lower low, lower high. So if we look into the chart, so it is very easy to identify three black row making lower low, lower high. This means continuation of downtrend. This inverse hammer, this is not a kind of doji candle. So market was in downtrend, then this happened and then it moved up. Then there was a doji, then consolidation, then few green candle, and then market moved down. So that is how once you keep on checking, understanding, reading these patterns, you will identify and you will take trade. So friends, I hope I'm able to help you in understanding candlestick chart pattern. With this, I am closing my this video, and I hope I am able to add value in your trading. And please like and subscribe to my video and channel so that whenever my new video comes in, you are able to watch it. So thank you for watching. See you in my next video.